Hello, everyone, and welcome to our webinar today. We're going to be talking about streamlining prepaid and accrual accounting, specifically why contract management matters for accounting teams. Before we start, we'd like to review a few administrative items just to make sure that you're able to get the most out of today's webinar. First, please make sure that you review the tool menu at the bottom of your screen and click on any of the icons to be taken to that screen or display the corresponding functionality. You'll see the Q&A icon, and that can be used to submit questions throughout. We will try to answer all of your questions live, but if we run out of time, we'll be sure to email you the answer within the next 48 hours. Next is the paperclip icon. You can click that to find related content for this webinar, to download or review some other tools and just guides and related info. You'll also see a react icon if you want to react to anything being said. And finally, and probably the most important for a lot of you, is the CPE certificate icon. So if you are watching this event live and are interested in getting CPE credit, this program is eligible for 1 CPE credit hour. To receive CPE credit, you must attend the webinar for a minimum of 50 minutes and then answer at least 3 of the 4 polling questions that I'm going to be asking throughout. Please wait until the end of the webinar to click on this icon. We'll announce when it's the right time to go ahead and download that certificate towards the end of the presentation. If you meet those CPE requirements, you'll click on the icon at the end of the webinar to see a green check mark, which will then allow you to download that certificate as a PDF in a new browser tab. You'll also receive an email later with a link to print your certificate. One thing about the polling questions, again, you don't need to get them correct, but you do need to answer them to be eligible for that CPE credit. So make sure that you scroll down on each polling question until you see the submit button to ensure that your answer is recorded correctly. If you have any questions about today's webinar, please contact us at cpeinfo@finquery.com. But with that, we'll go ahead into a little bit about myself. My name is Rachel Reed. I'm one of the technical accountants here at FinQuery. I've been here for about 6 years now. I'm a former auditor, and now I work in technical accounting. I graduated from the University of Mississippi in accounting. And a little bit about who we are as an organization. If you are not familiar with FinQuery, formerly LeaseQuery, we are a platform built to unite finance and IT. We have 3 core products: FinQuery Contract Management, LeaseQuery, and FinQuery Software Management, to provide a complete and specialized approach to manage businesses' top areas of spend, which are your financial contracts, leases, and software. So we were based in leases. We embarked on this journey back in 2011 for lease accounting, but fast forward to today, we've over 8,000 customers in 93 countries and a lot of very valued partners. For our agenda today, what we're going to talk through is what is financial contract management? Why does it matter? The hidden costs of having ineffective contract management, the benefits of having effective contract management, and then the pillars of effective contract management software. And then finally, we'll go through prepaids and accruals and what that would look like for you. But before we do so, we're going to go ahead and kick off our very first polling question of the day, which is: how many financial or vendor contracts do you estimate that you disperse payments for? So again, no wrong answers here, but how many do you estimate you have within your organization? 1 to 40 contracts, 41 to 100, 101 to 200, 201 to 500, or do you think you have more than 500? So no wrong answers here. We'd like to hear from you. Again, as a reminder, to be eligible for the 1 CPE credit hour of today, You'll need to make sure to answer at least 3 of these 4 polling questions and stay on for at least 50 minutes. Seeing some answers coming in. Again, this is our first polling question. Want to hear from you. How many contracts do you estimate that you have within your organization? Just a few more seconds on this first polling question. All right. So we're going to go ahead and close down this first polling question in 3, 2, 1. All right. And for those interested in where you are in relation to your peers, here are the results of that first polling question. And again, this is just an estimate. So thank you, everyone, for answering that first polling question. And I will go ahead and continue with our presentation. But again, we'll be asking those throughout. All right, so we're going to talk about financial contract management today. But what is it? What is financial contract management? So in essence, financial contract management is the systematic handling and management of contracts, focusing on your financial obligations and implications, but it focuses on post-signature contract handling. So that's important. These are things that have already been signed and executed. And so this will allow you to quantify your vendor spend, therefore streamline budgeting, improve cash flow forecasting, and just more proactively manage your contracts. So whether you're on the call today from finance, operations, legal, any other department, understanding contract management as a concept and how your organization manages your financial contracts is crucial because they're the backbone of the business operations. So how are companies doing this today? So there are some pretty common methods that we found that organizations are using to manage these contracts without any sort of specialized tool. And the first and probably the most common is through spreadsheets. Many organizations, probably yourself, rely on Excel or Google Sheets for a plethora of things, and probably including your contract details. And so what you're probably doing in there is just manually updating as things come up, different contract terms, which of course can be time consuming and prone to human error. And another way that you're probably doing it, probably in combination with those spreadsheets, is through email chains. You're probably having correspondence with your vendor and internally about different terms, updates, deadlines. So you probably have a chain you just search for to get reference to the updated contract. And that, of course, can lead to missed notifications and disorganization. You may also have like a shared drive or you have a file cabinet where these contracts are being stored. So you'll have physical storage, but also maybe like a virtual shared drive, like a Google Drive or a Dropbox, where you're just storing the contracts. And of course, that can make it difficult to search for specific things or maintain version control and centralize, especially if you have physical file cabinets. And then on top of all of that, we're seeing people create manual reminders on their calendars. And I have to say, I'm personally guilty of doing this in my personal life, right? I set up key contract dates for free trials and renewing, car insurance and things like that. But I can't imagine the amount of effort it takes to do that for, hundreds, thousands, even just probably 10 to 20 contracts to track all of those different dates and keeping up with that manually. And so that's, what a lot of organizations are doing is just manually adding to their Google or Outlook calendar without any sort of automation, of course, increasing the risk of oversight for payment deadlines and renewals. And so, of course, this leads to these common pitfalls that you see on your screen here, which includes a lack of visibility, because all of these different methods can create silos of information, making it difficult for teams to get just a clear, consolidated view of your different contracts and obligations. And then, as much as we all love Excel and spreadsheets, having that be a manual process that you're inputting into that spreadsheet can increase the risk of mistakes, like incorrect data entry and ultimately missing deadlines, which can lead to other consequences for finance and legal ultimately. Difficulty arises in accessing and searching and organizing the data. You might get an invoice for something and you got to pay it, but it can be hard to match the invoice with the contract to ensure that where this is coming from, where it's going to, and that you're being billed the correct amount. You probably can't even find the contract itself, let alone within the contract, the key terms, without any sort of search or categorization features. And then with the manual process of tracking the reminders, without any sort of automation, we're going to talk about this a lot more, but you end up with this, what we'll call reactive behavior. It doesn't give you an opportunity to make proactive decisions about your contracts before they come up. And your spreadsheet's also not updated unless something changes, right? So you don't know until it's too late to make those changes or to potentially, maybe renegotiate. And we want to make an important distinction here as we're looking at this. So sometimes when we talk about financial contract management, people think we're talking about just general contract or contract lifecycle management. So there's differences. While contract lifecycle management and financial contract management are both essential tools, they do cater to different aspects of the contract process. So contract lifecycle management and corresponding software for contract lifecycle management focuses more on the pre-signature process, and it's oftentimes used for things like customer contract management when you are the vendor providing a service to your customers, as opposed to financial contract management, which is more around your vendor contracts with your vendors and financial oversight and management of those post-signature after something has been signed. And so you, as an organization, you want to understand the differences between these things to determine if there's a solution for a certain part of your process or both process, or whether you need both contract lifecycle management and financial contract management, because that could make sense if you have both customer and vendor contracts to get that comprehensive approach to managing your contracts and all aspects of it by not only accounting, but finance and legal teams. So contract lifecycle management typically serves the legal team. And again, it'll focus more on the contracting process and generation and negotiation and authoring and back and forth negotiation of that. So sometimes you'll see with those tools things like templates for producing new contracts and workflows and a trail of signatures and negotiations of the terms. Whereas financial contract management serves the finance team, typically finance and accounting, and this focuses more on, instead of customer contracts that you sign to get services and software that you've purchased. And so the key benefits of a financial contract management are going to be things like a central repository, critical alert tracking, data for financial reporting and forecasting. And again, we're going to talk through some of these specifically today. So I just wanted to kind of outline the differences, as sometimes these can get mixed up when we're thinking about contract management. All right, so we've talked about how we're seeing a lot of people do their contract management and financial contract management. And as organizations grow and the number of contracts you have becomes more difficult to track on these manual processes, and they just become more complex, it can lead to a variety of costly issues. So we're going to talk through some of the hidden costs that are associated with not managing your contracts effectively. And these can be overlooked because they're hidden, but they can have a significant impact on your bottom line and ability to make decisions. So let's look at some of these and talk through them. So these are some of the hidden costs of ineffective contract management. The first one here, we talked about, having these manual processes where you're just inputting the updated data, you're inputting calendar reminders. You can end up with missed renewals dates and price escalations that you don't necessarily want. Because if you're overlooking these auto renewals, you can end up being locked into unfavorable terms or in just inflated pricing. And of course, which drains your budget because you didn't budget for it. So like this is a pretty common scenario, with things like software, cloud storage. I mean, imagine you auto renewed at a 30% price increase because no one was tracking the renewal date. No one knew there was an auto renewal at all. And so that's money, that increase that you could have saved by proactively, again, moving from reactive to proactively negotiating the contract, or even like exploring alternative providers if you had visibility into what your increase is going to be. And similarly, you may have had like an economic out, but you didn't act on it because you missed the window. Of course, that leads to lost savings opportunities, not only for unfavorable terms and price increases, but you may also have savings opportunities in discounts or volume-based pricing, rebates, things that your vendor might not be too keen to just point out for you, right? It's probably written somewhere buried deep within the contract. And if you're not actively tracking and familiar with your contract terms, you're essentially leaving this money on the table when you may have an opportunity for savings for your specific vendor contract. And all of this manual tracking and scattered contract data, in addition to the wasted money, of course, you also have the wasted time with these inefficient processes, causing delays and missed opportunities. So like if you need to search for, or your team needs to search for a specific contract or clause, they're having to search through all of these different files, email a bunch of people. There's no centralized place where this is located where they can reconcile the information. That's time that could be spent on other things that actually drive your business forward. And it creates those operational inefficiencies when they're scattered across those different departments, or as we discussed, buried in an email thread, 30 emails deep. You have all of this chaos as they're searching for the source of truth, and you end up having approvals get delayed and tasks falling through the cracks, missing your deadlines, and just decreased productivity around these contracts. Not only do you end up wasting time, but as a result of all of this, with these manual processes and data entry and version control issues, you could end up in a situation where you have costly non-compliance penalties and even legal disputes. I mean, a simple, we've all seen it happen, right? With a spreadsheet, a simple data entry error turns into a missed payment or a miscalculation, or you get an error in your formula, right? And you can't figure out what it is. This could ultimately lead to not only missing a payment, but triggering late fees, even a breach of contract. And so if you're operating in a heavily regulated industry, non-compliance can result in hefty fines and reputational damage. And as you've got these things floating around, you also have to consider things like data security and data security breaches, because insecure contract storage and sharing practices, which as we've discussed a lot of times through email, can lead to data breaches and again, fines on top of that with compliance. So missing payments and compliance issues can put a strain on your vendor relationships, because you've got, things like miscommunications and missed payments. I mean, think about where they are, like where your valuable vendors and your partners are. Imagine their frustration, right? Because they haven't been paid on time, or there was an oversight in your process. That can lead them to not trust you anymore and impact future negotiations. So you might have a hard time in the future getting concessions or negotiating future contract terms, losing your status with them, and even them terminating your relationship entirely if it's bad enough. So as you think about, ineffective contract management, the highlight of this, of course, is all of these missed costs and missed saving opportunities. And so with the strategic opportunities that a contract management system provides, you don't miss out on this, because as you think about your contracts, like we mentioned, you may be missing out on, payment increases or chances for renegotiation. Without a clear understanding of that, you also might miss out on opportunities to consolidate your contracts. I mean, you might have a few contracts for the same type of service and you don't even realize it. So you can, again, save money there. So by not doing so, it's another hidden cost. So these are all of some of the hidden costs. If you don't believe me, according to Goldman Sachs, automating contract management can help reduce erroneous payments by 75 to 90% and lower the cost of managing your contracts by 10 to 30%. And even further, as I mentioned with these vendor relationships, as we all know, we didn't really talk about like what is a contract, but contracts, as you all know, are legal obligations between parties, and they are often exhibits in corporate litigation. So according to Gardner, again, another fun fact here, I was surprised by this. In the US, contract disputes represent 64% of cases in state courts. 64%. So it is vital that you know that you've got a good handle on your contracts, not only for your day-to-day, but in case something arises. All right. With that, we're going to kick off our second polling question as we're talking about different issues and hidden costs. We would like to hear from you. Have you encountered any of these issues with invoices or contracts? Choose all that apply. Trouble matching an invoice to a contract. You've been incorrectly billed on an invoice. You have an unclear approval process for invoices. Maybe you got an invoice for a contract without a copy. You discovered a contract after financial close, missed a significant expense accrual, which we're talking about, due to no knowledge of a new contract being signed, or hey, maybe none of the above. So we're going to leave this open for a minute or so, but while we're doing so, just a reminder to everybody, if you'd like to be eligible for CPE credit today, this is eligible for 1 hour. You'll need to answer at least 3 of the 4 polling questions we're asking and stay on for 50 minutes. And make sure that when you answer the question that you hit submit to ensure that your answer was submitted. If you've experienced any other issues outside of these, also you feel free to let us know in the chat. Of course, make sure that you answer the polling question live, but if you want to add additional context or let us know your story, feel free to put that into the chat. So again, this is our second polling question. We're going to leave this up for just a few more seconds. All right, everyone answer that polling question. We're going to close it down in 3, 2, 1. All right, and for those of you who are interested in seeing the issues that other people are experiencing compared to yours, here are the results of that second polling question. Thank you, everyone, for answering that second polling question. And we're going to go ahead and get back to the presentation where we're going to be talking about the benefits of contract management. So we were talking through the hidden costs of not having a proper contract management system. So let's shift gears a little bit, and we're going to talk about the benefits of having a solution for this problem. As we discussed, sort of in summary, ineffective contract management is a silent drain on your resources, as managing these contracts manually or through disconnected systems can lead to confusion, errors, lost opportunities, and costs. With a contract management process, you do gain a single source of truth for contract data, which simplifies your process and workflow, but also strengthens your decision making and allows you to have a proactive approach with collaboration and real-time updates so that you can work effectively and strategically with your process. So by getting the right process and tools in place, you can uncover those costs and turn them into opportunities for growth and profitability. So a financial contract management solution offers different features and functions that would provide your company with visibility into where your money is actually going. So it centralizes and organizes your contracts for easy access and visibility. Additionally, that fosters cross-functional collaboration between all the people that may have their hands on contracts. So, of course, legal, but also finance and operational teams, and even your auditors. This leads to improved efficiency and productivity as all of the team members can access information quickly without wasting time searching through files, and again, being able to focus on higher value tasks. And ensures that you're working with the same up-to-date information. You're not looking at the old version of a contract buried deep in an email chain. You're looking at the same information that everyone else is looking at, which reduces the risk of errors or discrepancies or, again, missing those crucial contract terms, which can be very difficult to deal with when you're dealing with complex arrangements and different compliance requirements. When all of these different teams have this immediate access to contract details, again, they can make better decisions about these. So understanding your terms, your obligations, and dates allows you to renegotiate or just empowers the team to make these decisions, but also be able to budget more effectively, right? If you don't know what you're spending and where you're spending it, then how can you possibly optimize your cash flow and budget? You're probably constantly going to be going over or under your budget because you don't know what things are costing. Additionally, for like the audit, having a source of truth helps, right? So that they can review necessary documentation and verify compliance. So it reduces your time for audits related to your contracts. And with proactive management of your date tracking, those automated alerts will ensure that you are ahead of those deadlines so you can take timely action. So you miss the, you don't miss the opportunity to renegotiate or exercise a clause or an option that requires a certain amount of days notice. And that also you don't end up with a lapse in service. Oops, we didn't renew this. Now we don't have access to it until we renegotiate it. So you've got all those, and then you've got the cost savings with the opportunity for discounts, favorable terms. And this in turn allows you to streamline the contract costs, get a comprehensive view of your spending, make those informed decisions, budget accurately, allocate funds appropriately to the correct departments, to the correct locations, business units, so that they can effectively manage the spend within their own areas. And it just creates more predictability. You can predict financial needs. You make sure that you have enough money to meet these commitments, so you don't end up in litigation by avoiding these cash shortfalls. You can better prepare and avoid those shortfalls that could disrupt your operations, or again end up with termination of service, because if you don't pay, you miss out on your service, and that disrupts all types of processes when that happens. And the other thing here, we talked a little about CLM or contract lifecycle management solutions. So again, those are pre-signature. They often fall short in post-signature. So financial contract management will bridge that gap because that easy access and post-contract signature functionality allows for the things we've talked about, right? Forecasting, spend quantification, and collaboration and budgeting. So this extends beyond the traditional capabilities of a contract lifecycle management process or software, which is typically just utilized by the legal department to make sure that the contract gets signed and negotiated. So we were talking about software. These are, again, just the high-level benefits, right? You've got the single source of truth for contract renewals. Why does this matter to accountants? Why does this matter to you? Again, you want to monitor financial performance and identify issues early on. So something I haven't talked about yet is I've talked a lot about you being liable for the things in your contract, but you also want to make sure that your vendors are giving you the value that they should be. You're getting the value that you expect within your contract. So you can track performance of your vendors against the terms and ensure that you're getting everything that you're owed in that contract instead of it just being the other way around, right? I've talked a lot about you being liable and on the hook for these different terms, but they are too. And so accountants can help identify potential financial risks, those, compliance violations, and take proactive measures to mitigate them, and legal can have the visibility to hold the vendor accountable for any sort of breach of contract. So again, it empowers you to shift your thinking about these contracts instead of reacting to these problems after they've already happened. You can anticipate and prevent them, and you have the power of this data to be able to not only mitigate the risk, but improve your financial outcomes and negotiate potentially with other vendors. Since you have the terms, you know what you need, you'll have visibility to that. Then you can say, okay, we're more equipped to go to this vendor and either renegotiate or go to other vendors and negotiate a new contract. So no more scattered information, no more surprises. You get this 360 view of your contract landscape. You've got collaboration happening between these different departments, all working together to achieve these goals, all have access to the same information, the same risks, identifying those risks, and you're never going to be caught off guard by a missed payment or a looming contract deadline that you didn't even know. And then, of course, with all of this, you end up with better insights. Again, I know we're talking mostly to accountants today, so you end up with better budgeting and data insights and maximizing the value of your contract so you can maybe cut down some of the spending on some of these contracts or consolidate it together. All right, so what are the key pillars of the software? So we talked about, that section was a little bit more about effective contract management and benefits, a little bit of software sprinkled in. But if you are looking or think you're looking for a software for effective contract management, these are some of the key pillars that you should be looking for, sort of a checklist, if you will, for effective contract management. So we'll talk through these in detail, but as you can see here, these are in no particular order, but I might even argue that you could make the case that they are in the order that they need to be in, because ease of use is one of the most important. But ease of use, easy contract entry, having a centralized repository and easy access, automated reminders, and reporting are the pillars of effective contract management solutions. So when I said that ease of use was arguably one of the most important feature functions of a software for effective contract management, I'm not exclusively talking about contract management. I'm talking about in general. There's very little benefit, and some people on the call probably know this, and getting a software that people don't use. And the reasons that they don't use it, I mean, you'll hear anything, but one of the main reasons that people won't use a software is because it's too difficult, or it contains too many bells and whistles and they can't just easily get the information they need. How many times does that happen where you identify a place where something could be automated and people end up just reverting back to their old ways because they didn't know how to use the tool, they didn't want to get trained on the tool, waste time learning a difficult system. So having a complex system prevents people from adopting it. So you want to make sure that any software you use in an organization, not just financial contract management, is the right size for you. It's not too big or overwhelming, or has functionality that you're paying for but not using, and it's not intimidating for people, because you are asking them to switch up their processes a little bit from the way things may have been done for years. And so the design of a software should be user-friendly, should be intuitive, makes it easy to find what you need, and require minimal training. So you're not interrupting the processes you have with hours and hours and hours and hours of training. Again, you're going to put up a wall if you're looking for a software that requires that much training time, because people are unlikely to use it. And additionally, support should be important. Again, this is not isolated to contract management software, but just a pillar of any software evaluation you're using or looking at. It should have support, because while you may be able to lean on other team members and say, hey, do you know how to run this report in here? Or, which, I mean, it's good. But a lot of people just know how to use the part of the system that pertains to them. They know how to get in, get the data they need, and get out. So you need someone at the vendor to actually reach out to if you've got questions. So, things like tutorials, response assistance, and customer support for any software, whether it's financial contract management or anything else. Additionally, you want to make sure that it's easy to get your data into a system. Again, we don't want this to be complex. We don't want, you've heard the expression, garbage in, garbage out, right? Any software that you use is only as good as the data that you put in. So you want the data entry process to be streamlined, simple. Should be a few ways to do so. AI is something that a lot of organizations are utilizing to get data into tools. But on an ongoing basis, you want to ensure that people are excited to use it and put their data in. Because if you have a software for anything, specifically for contract management, and no one puts the data in, then you can't get any of these insights, and you don't have the collaboration and the centralization if people aren't able to put accurate data or any data at all into the software. And then the other pillar of this is easy access with having a central repository. So typically, depends on the type of organization you are and what you guys typically lean towards, but you would be most interested in a cloud-based typically, because it allows the most access from the most people in the most locations, and you have a secure cloud access. Organizing it is also important. Having the ability to search for data, tag data, have the terms, and track changes to it. Because again, like we've talked about, having data across different places and not being able to have visibility into these things, it defeats the purpose. If you have a software that doesn't have all the information or isn't able to be, you're not able to get the data out. So you want to make sure that you've got easy access. It's easy to access. It's easy to put data into. It's easy to get data out. And it's easy to set up reminders for these things. Because if you remember, we were talking about what a lot of people do, again, myself included, for my personal calendar, I set up these reminders. Any sort of effective contract management software should have automation for a lot of these processes. And one of these is for the key date reminders about these things. So you have the time in advance. So it'll notify all parties, instead of it just being a back and forth with maybe one person and the vendor, and they're like, oh, hey, when's this? When is the deadline for this? Everyone will have visibility to it. You can set it up so that everybody gets reminders about these things, and not only the dates, but the tasks associated with it. So if there's action that needs to be performed, or, hey, we want to renegotiate this, you can create reminders for those things as well, so that you're empowered in advance of those key dates and nothing falls through the cracks. And then once you've got all your data in, you've got everybody trained on it, you've got the contracts in there, you've got the date notifications. For the accounting team, you want to be able to have reporting for the visibility that you need. You want to, for spend visibility, have that overview of all of your upcoming payments. So what contracts do we have? What payments are coming up? How can we budget for this? those are no surprises. And then be able to make those data-driven decisions so you can leverage that contract data and find cost-saving opportunities with your negotiations. That, of course, leads to improved cash flow management as an organization, so you can maintain your financial stability as an organization and make sure you're paying the right people and paying them on time and forecasting it on time. And simplify your reporting and financial reporting process so you have consistency. All right, we've made it to our third polling question. If you haven't guessed yet, we're about to talk about prepaids and accruals. So we want to hear from you. If you have, as an organization, prepaid or accrued expenses, where do you store that information and manage the accounting activity? Is it in Excel or spreadsheets? Do you have this being managed in an ERP? You have another software? Or hey, maybe you don't have any. Maybe you guys are operating under a cash basis. So I'm going to say this one more time, and I'll probably say it at the end as well. As a reminder, if you'd like to be eligible for CPE credit, make sure that you answer at least 3 of the 4 polling questions. This is the third one of the day, and stay on for at least 50 minutes. And make sure that when you answer the question, you hit submit to make sure that your response was recorded. I imagine I know the answer to this one for a lot of organizations, just based on some of the market research we've done, but where does that prepaid and accrual accounting live for you? All right, seeing some responses come in. Again, we're on our third polling question. Let's get in these responses so we can get our CPE credit, or you can get your CPE credit. All right, we're gonna go ahead and close this polling question down in 3, 2, 1. And here are the results. Not a whole lot of surprises here. If you did this, if you are a person using another software, when it says please subscribe, if you want to put it in the chat, or if anyone wants to put their answers into the chat with a little bit more context, certainly love to hear from you. But again, thank you all for answering that third polling question. Let's talk a little bit about contract management and as it relates to prepaids and accruals. So we talked about contract management, the importance of it. There's another layer to this because, as you probably know, when you have a contract, you have payments. And the timing of the payment doesn't always align with the actual usage of the good or service in the contract. And that results in some proper accounting treatment required. Now, this section is probably going to be a bit of review for people who are already doing this manually today. But it's important to consider the basis of accounting that you're using as an organization when assessing how to account for contract payments. Because if you're an entity who follows US GAAP, therefore, you issue US GAAP compliant financial statements, you are required to use the accrual basis of accounting, which uses the matching principle, which requires you to recognize revenue and expenses in the period in which they're used or occur over time. So you recognize this expense once the service has been used. Prior to using the service, you'll have an asset because if you make a payment, you haven't used it up. And on the flip side, you've got a liability if you make the payment in arrears, which again is prepaid and accrual, which we're talking about today. But if you are an organization that does not report on US GAAP, you use the cash basis of accounting, you are not going to be attempting to do this matching principle in which you match the cost of a good or service to the period of use. But under the cash basis, you just immediately record the payment as a purchase, as expense, as soon as the cash is paid. There's no trying to match the usage of the asset over time. You just immediately expense as soon as cash is paid for the full amount. So keep that in mind as we're going through this, depending on the type of organization that you are. This may or may not apply to you. But let's take a look at some prepaids. All right, so prepaids you probably have as an organization, again, if you're under the accrual basis of accounting. These result from you, hence the name, paying in advance for a service or a good that hasn't been performed or hasn't been delivered. You haven't gotten it yet. So common examples of prepaids are things like insurance premiums, right? You pay for a year of coverage. Subscription, same thing. You pay for a year of access or however long. Same advertising, right? You pay for this for a certain amount of advertising. So when this happens, you make a payment, you have this asset, and as time goes on, you're using up the prepaid, essentially. And so the prepaid amount goes down as time goes on because it's no longer prepaid, it's being used. And so as it is reduced, you recognize expense over time. So by the end of the contract term, you have no prepaid asset anymore on your balance sheet, but you have the full amount of expense, which has been appropriately recognized in the corresponding periods of usage for the contract term. So let's talk a little bit about what this might look like. An example, all right? So you're budgeting, this is your year, right? You've got a contract, let's say for software, and we're gonna make the math really easy here. You end the contract terms, you've agreed to pay $12,000, prior to the contract beginning, or maybe on the first day of the contract, depending on the specific terms. And that is going to cover you for access. Maybe that's for 100 users or whatever the case for the 12-month term. So when you make that $12,000 payment, each month that goes by in that contract term, you are going to be using a portion of that $12,000 payment. So it's $12,000 that you're paying covering 12 months. So I said it was going to be easy math. The reason for that is we're just going to take $12,000 over 12 months, and that's going to be our expense straight line for each month. So each month we're going to recognize expense. At the beginning, right when you make that $12,000 payment, you offset that payment with a addition of a prepaid asset. So this represents the subscription that you have not used yet, right? Again, it's a cloud-based, but it doesn't matter. You haven't used the subscription term. Each month that goes by, you are using it up. So you've reduced your prepaid by $1,000, matching that expense, until at the end you have $0 of prepaid, $12,000 of expense, and $12,000 of cash, which was already paid at the beginning. The journal entries you would make would look something like this. You've got the initial recognition of your prepaid. It's going to be a debit to your prepaid asset. You could call this prepaid subscription asset. I just call it prepaid asset for our demonstration purposes. And you've got this credit to cash. So you're prepaying the 12 months worth of subscription up front. So you reduce the cash and increase the asset. And each month, at the end of the month, as that time has gone on, so at the end of January, end of February, end of March, you're going to make this entry to reduce the prepaid asset that you have by $1,000 and make a corresponding debit to increase the expense. So it's moving from being prepaid into expense. You also have the other side of this, which is an accrued liability. An accrual or an accrued liability is the opposite of a prepaid. It's an expense that's been incurred, but you haven't made a payment for it. So typical examples of this are payments made in arrears, utilities. So you normally use up, the utilities, water and electricity, and then they bill you at the end of the month or in the quarter. Taxes that you owe that you haven't paid yet. So while prepaids were an asset on your balance sheet, accrueds are a liability on the balance sheet. And so in that example, while it's less common for a subscription to be an accrued liability, we can just use the same terms and demonstrate the same idea here, but the timing of the payment is what's going to be different. So with an accrued liability, you don't make a payment at the beginning, you make it after usage has occurred. So instead of recognizing the balance sheet item and reducing it over time, you don't recognize the balance sheet item, but then you increase it over time. So let's look at that same scenario we were talking about here. All right. So same contract terms. Again, you're probably not going to have a subscription that says pay at the end of the year, but maybe you do. It's less common. Normally they're prepaid. But let's say $12,000 you've negotiated, that's going to be paid at the end of the contract term. So you budgeted your $12,000 payment. Now, that doesn't mean that throughout the year you don't recognize anything, but rather you know that in your contract you're going to need to pay for this subscription or this agreement at the end of the year, and you're using it up. It's the same year we're talking about here, but the timing of the payment is at the end. So that coverage period is all the 12 months prior to that payment being made. So you have to still, just like our previous example, recognize $1,000 of expense because you take the $12,000 over the 12 months and get your $1,000 of accrual. But instead of taking that prepaid, because you don't have a prepaid in January, you have no payment. Each month of use, you have to recognize an expense because you're still using it. So as the corresponding part of the entry to the expense recognition, you're accruing a liability, basically saying, hey, we're using this and we're going to owe on this at the end of the year. So each month that goes by, you're using this up. $12,000 at the end is what you would have ended up with if you didn't make your payment. But at the end of the term, you make your payment. So you take that $12,000, you say, hey, I don't owe you any more money. Accrued liability goes to zero, and you end up with the same result, which is a $12,000 payment and a $12,000 of expense. So same as our prepaids, but throughout the year, right, you've got a liability instead of an asset. So these are the entries here, basically the opposite, but initially you recognize no cash payment, but you recognize expense at the end of the month throughout the subscription term to accrue this liability for the portion of use in that month. So you've got 12 entries that would be made. And then at the end, when you actually make the payment, you reduce out that accrued liability and credit your cash to actually make the payment on that liability balance. So why are we talking about this today? Well, we're happy to announce the addition to financial contract management, our ability to manage your prepaid and accrual accounting. We asked people, what were you currently using to manage prepaids? And 73% of those we asked in previous surveys had been using Excel and manual processes, which is not uncommon. And so this will allow accounting teams to accelerate their month end, quarter end, year end close, simplify the process of audit and reconciliation, eliminate those manual errors, tracking those in spreadsheets. And again, just like financial contracts and your leases that you may have, you can gain a centralized view of your prepaids and accruals. More specifically here, you can automate your amortization, financial segment allocation, expense forecasting. This will serve as a single subledger. You can streamline your reconciliations for insights into like your roll forwards for this asset and liability. So again, just getting you out of those spreadsheets, which is where we're seeing a lot of this data tracked, it's layered on top of the financial contract management piece. So you add in a contract, you add in the product, service, or payments, and it does the appropriate accounting for you. So here are some examples of some of the slides that we've got up here just for demonstration purposes. We're not going to go through this in depth necessarily, but how this would potentially work is you have the ability to set up different chart of accounts information, allocations like your departments, and you'd set up your product, services, and payments in the system, and it'll create those amortization schedules for you. So it creates that prepaid or accrual schedule for you and allows you to get the outputs. So things like journal entries, financial reports, so that you don't have to do all of that within Excel. So again, this is sort of a little sneak peek here. Just wanted to kind of show you guys, and the reason why we wanted to give you a little bit of a sneak peek here is because, as you again know, we've talked about financial contract management today. But we wanted to, again, just tell you about that add-on we now have for prepaids and accruals. And as we've discussed, financial contract management provides a lot of key benefits, can become a central repository, gives you financial reporting, date alerts, and the cost of ineffective contract management isn't something that you want to bear as an organization. So with that, we're going to go ahead and kick off our fourth and final polling question, which is if you're interested in a demo of FinQuery financial contract management. This is not required you're not required to schedule a demo for CPE, but again, it is required to answer the question. If you want to be eligible for CPE, you will need to have answered at least 3 of the 4 polling questions throughout and stayed on for at least 50 minutes. So this last question we're going to leave up for about a minute. All right. Just a few more seconds. Thanks, everyone, for answering that fourth and final polling question of the day. If you are interested in earning more CPE credits, in addition to our live webinars we have virtual on-demand webinars now. So if you'd like to check that out, we've got a lot of free virtual on-demand webinars that you can do at your own pace. They're a self-study, so you can watch that and earn your CPE on your own time. But with that, if you are watching this event live, again, this is eligible for 1 CPE credit hour. You would have needed to stay on for a minimum of 50 minutes, and you must have answered at least 3 of the 4 polling questions that we were asking throughout. If you did meet this criteria, you should now be able to see a certificate for download. So you can click on that within the On24, and then also we'll be following up with you in an email with your CPE certificate. So if you want to go ahead and click that now, you should be able to download it. But again, thank you everyone for joining. If you have questions about CPE, please email cpeinfo@finquery.com. That's about all we've got for today. If you were interested in scheduling a demonstration and you do so using the link on your screen here, you'll receive a $25 gift card. At the end of this broadcast, you will see a survey pop up on your screen asking you how we're doing, what we can improve on. Just let us know. Any feedback we'll be certain to use for future presentations. But with that, thank you again, everyone, for joining our webinar for FinQuery, and have a great rest of your day.